Welcome back to the channel, guys. I'm your host Buckning, and today we're going to update the portfolio, update the dividend tracker, show you the position that was updated, as you guys know. And we'll probably talk a little bit of what's going on in the marketplace, what to be aware about, and also the big focus for this past week, which is just crazy. And I'll explain my take on that and kind of what's going on there. And so if you're new to the channel, welcome. This is where we take $100 a week and deposit it into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So we'll just get right into it, update you guys on what's going on here in the portfolio. But it was a rough week. It was a rough month this month for the marketplace, just for the stock market in general. And so except for a few, but we'll talk about those later. But for the day, we closed out our portfolio closed out at $2,577.31, down $46.50, down 1.77%. For the week here, we're down $49.40, down 1.88%. For the past week, for the month, we are down $7.97, down 0.31%. For the 3 months, we are up $205.28, up 8.65%. For the 1 year, we are up $232.31, up 9.91%. And that is the same for all. First position that we own is Bell Canada, closing out at $54.24 for the week. We were down $1.13, down 2.04%. We own 2 shares of that. Total position value of $108.48. Our average price is $58.05, and it holds about 4.23% of the portfolio. Today's return is down $2.26 on the whole position, and down 2.04%. Total return since owning the position is actually down $7.62, down 6.56%. Next position is BMO, Bank of Montreal, closing out at $95.12. We are down $1.95, down 2.01%. We own 5 shares of BMO. Total position value of $475.60. Our average price is $81.32, and it holds about 18.57% of the portfolio. Today's return was down $9.75 total position wise, and we were down 2.01% on this position. But our total return since owning the position is $69, 16.97%. Next position we own is Bank of Nova Scotia, ticker symbol BNS. Total position, or closing out at $68.20. We were down 96 cents today, down 1.39%. We own 7 shares of that. Total position value is $477.40. Our average price of getting in is $54.58, and it holds about 18.64% of the portfolio. Today's return is down $6.72 overall, but our total return since owning the position is $95.35, up 24.96%. Closed that way too fast. This is our next position, closing out at $61.75. Loblaws, ticker symbol L, down $1.29 today, down 2.05%. Not today, but when market closed for the week there. We increased our position from 3 shares to 6 shares. Total position value now is $370.50, and our average price of getting in is $63.27, which is above what the current stock price is, and that's okay. We've increased our position value in this, or not position value. It holds 14.46% of the portfolio. We were down $6.18, down 1.64%. Total return since owning the position is down $9.13, down 2.40%. Just to give you an idea here, we bought 3 shares in the morning there at 7:55 a.m. Right when markets opened, pretty close to when markets opened, because they opened at 7:30 my time. And we bought 3 shares at $62.52. Total position increase of $187.56 invested into Loblaws, because we just wanted to increase the percentage portfolio percentage amount of the portfolio for Loblaws. I just want to increase that position, and so very good about that. Very good decision on my end, I think, for that one, just because I want to balance out the portfolio a little bit. Next position is Manulife Financial Corporation. $23.11 is what it closed out on Friday, down 50 cents, down 2.12%. We own 17 shares of Manulife Financial Corporation. Total position value of $392.87. Our average price of getting in is $19.26, and it holds about 15.34% of the portfolio. And this is the other position that I'd like to increase as it goes down. I want to be around that. I think 12 or 14% in each position, as we only hold eight different companies within this portfolio. But we're just looking to increase the dividend from month to month, because this is a dividend portfolio. I just want to show you guys how easy it is to build one. So today's return was down $8.50, down 2.12%, but our total return since owning the position is $65.43, up 19.98%. Since owning this position. Next position we have is Royal Bank of Canada, closing out at $103.50. We are down $1.67 each share, down 1.59%. We own 4 shares of Royal Bank of Canada. Total position value of $414. Our average price of getting in was $106.74. So looks like we have bought maybe on the high end, which is fine. We can just come back to it and do our dollar cost averaging down. This holds about 16.16% of the portfolio. We are down $6.68 on the day, down 1.59%. And total return since owning the position is actually down $12.97, down 3.04%. And that is Royal Bank. Next position we want to talk about is TELUS, closing out the week at $26.39, down 56 cents, down 2.08%. We own 4 shares of that. Total position value of $105.56. Our average price of getting in was $25.36. It holds about 4.12% of the portfolio. And today's return was down $2.24. But our total return since owning the position is $4.12. And that is TELUS. Next position we own is TD, Toronto Dominion Bank, closing out the week at $72.46, down $1.39, down 1.88%. We own 3 shares of that. Total position value of $217.38. Our average price of getting in is $71.94, and it holds about 8.49% of the portfolio. Today's return was down $4.17, down 1.88%. And our total return since owning the position is $1.55, up 0.72%. We only have $15.52 in the cash portion of this portfolio. As you can see, I have Apple, Cisco, and Tesla on the watch list. And then, so now we'll just go back and we will update our dividend tracker. So which is on here, which is trackyourdividends.com. Just got to pull it up here. So a lot of people did ask, not a lot of people, but someone did ask me, how do you change the currency from US to Canadian? Actually, it's just on this one right here where it says summary. If you click on the little box, you can select USD Canadian, because if you buy Canadian stock, it'll convert it to a US currency. So that's how you change the currency. So you can actually change it to whatever you want. I think that's Australia, euros, Great British pounds, Canadian, and US. So that, just so you guys know, because I know it is confusing. It's not in the settings, which is weird, but it's just right here on this little box. Okay, so last week our portfolio value was our total value was $2,378, up $210. Our dividend yield, if you were to build the portfolio today, just like this, just the way it stands right now without updating the position, is 4.31%. Our yield on cost is 4.72%. So we are getting a bit more because we are buying at lower prices when it comes to positions. And our annual income from this portfolio is $102. And so what we're going to do is put a new holding for Loblaws, because that is the position that we updated. So it's L for the ticker symbol and .to because it is a Canadian stock. We bought 3 shares of that at the cost basis of $62.52. And we'll just go add, and I'll update our Loblaws position from 3 to 6. Now our total position value went from right up to $2,564. Dividend yield, if you were to build this portfolio, would give you a 4.07% return, and our yield on cost is 4.43. Annual income increased from 102 to 104, which is fine. As you can see, Loblaws has updated itself. So the annual income right now is 3.78, or not 3.78, $3.78. Is this Canadian? Yes, it is Canadian. Okay, cool. And so that is that. So we'll just go back to the main screen here, and let's talk about what is going on, because I want to make sure that people are aware, because there is a lot of noise happening within the marketplace. And so just remember, I'm not a financial advisor. I'm definitely not your financial advisor. I'm just a guy on YouTube giving my opinion. That is my full disclosure. If you need professional advice, go seek it, and please do your own research before making any position updates in your own portfolio. Do your due diligence, and figure out what is, fitting for your portfolio. I don't recommend doing exactly what I do, but do seek a professional. And so, yeah, let's talk about what's going on in the marketplace right now. The main thing that's happening with it is we have a stock called GameStop, ticker symbol GME. If you haven't heard about this, then you might be living under a rock, but it is one of the biggest things happening right now, starting season 21 of the world. And what is happening is there's companies that are called hedge funds that typically, and this gets more complex. It's a strategy I don't dabble in, but it is called options trading. And options trading can be very, very expensive. That's where you actually need a large sum of capital to do options trading. And so let's talk about GameStop. GameStop still is the number one shorted company in the stock market. Well, the American stock market. 97% of the company's stock was shorted. And when I say shorted, what I mean by that, or what that actually means is there's companies out there called hedge funds that typically will make money and do contracts and things like that, and sell something that they don't actually own, and bet that the company will go down in stock price. And 97%, if you can imagine how many shares GameStop has, 97% of them are shorted. And so what typically happened, what actually happened was some guy decided, no, I'm gonna put a call option on this, and what he did was said, no, I think GameStop is worth more than $4. And so honestly, it's more complex, and I don't have enough time to explain it, but I'm just gonna say this is if you are looking to get into GameStop because of hype, because of what's going on in the marketplace, because people are keeping their eyes on it, I'm not even gonna get into it. Actually, I changed my mind, but I'll leave it in the video. Is if you're willing to lose money, then sure. And if you're willing to gamble, because it's bigger than that now. This is a movement. It's no longer about making money off of GameStop. It's more than that. And there's plenty of videos out there. I've seen them through my feed all the time now. And I just want you guys to know that just because someone says AMC or BlackBerry or things like that, be very, very careful, because where the squeeze is happening, the short squeeze is happening in GameStop, because it's 97% of it's being shorted. I don't even know what AMC's amount of shares are being shorted, but when it's 97%, that's where it's happening. It's not happening at BlackBerry. It's not happening at AMC. It's not happening at Nokia. Okay, it's happening where the almost 100% of the company's stock is being shorted, and I get it. A lot of people want the Blackberries and the Nokias to be the next short squeeze. But let me tell you something about hedge funds and companies that buy millions and millions and millions of shares and they trade millions and millions of dollars. They're not, and don't take this the wrong way. They are not, I'm not calling anyone stupid or anything like that, but they're not stupid. They are, and I'm not picking sides or anything. I just want you guys to know when there's an inefficiency in the marketplace, these companies are the first companies to find it and change it, and so that it doesn't happen again. And they are very, very smart people. And I'm not saying that people not on Wall Street are not smart. I'm saying that everyone has, their strategy and things like that. But every time there's an inefficiency in the marketplace, they solve it and they get through it. And so if you're a new investor and because I guarantee you there's a lot of new investors that came in here and were like, I'm buying GameStop stock GME and I'm going in and I'm going to make a ton of money because of this short squeeze. Please understand what you're doing. Please, like I say, do your research, do your due diligence. Don't get burned. Because if your first stock ever, sorry, I hit the mic. If the first stock that you buy in your entire investing life is GameStop and you get burned or something happens, you lose your whole investment, you're never going to invest again, to be honest. And it's not always like this. This is a very rare opportunity. Believe me when I say that, when this happens. And it's not going to happen every single time. It's not something that happens every day. I don't know what people sometimes think that this is going to be a common thing. When there's an inefficiency in the marketplace like this, it will get fixed, and it gets fixed fast. It gets fixed faster than even the governing bodies can come in and fix it. That's how fast it gets fixed with these companies. And I'm not taking sides. I'm just letting you know the downsides of this stuff. And so please be very careful. Do not gamble with money you're not willing to lose, is a saying I always go by. And to be honest with you, I got into GameStop, 100% I did. But I've already come to accept the fact that if money is lost, I'm okay with that because it's bigger than that. And so that's my take on it. And I just want you guys to keep an eye on the marketplace, because what's going on in the marketplace is everyone's focus seems to be on this GameStop, GME, AMC, BlackBerry, Nokia, all that stuff. And everyone thinks that they can squeeze every freaking company. It's not reality. While everyone's focused on that, did anyone notice that the market was down this month? Like the whole market, S&P was down, NASDAQ was down. Apple came out with their earnings. They blew their earnings and numbers out of the water, and what happened to their stock? It went down. Tesla came in, profits, things like that, stock went down. Google came in, or sorry, not Google, Microsoft came in, blew their numbers out of the water, stock went down. Did anyone pay attention to that? Or is everyone focused on GME, AMC, and what's going on and trying to make this quick buck sort of thing? And so I just want to make sure that you guys understand that this game that people are playing is a game that can be very dangerous. I'm not saying it's not. I understand the movement, and I'm part of that movement. I get it. I bought my shares and my portion, and I'm holding on to it. And like I said, I'm accepting the fact that if I lose that money, it's fine, because it's bigger than that. It's so I'm sure you guys all know, but if it's your first time investing, I'd really ask that you question whether or not it's an investment to make, or is this straight gambling and or speculation, I guess I should say. It is a free market. You're allowed to do whatever you want, but don't come back and say, you told me to buy this. I didn't tell anyone to buy anything. I'm saying use your own discretion when it comes to that kind of stuff, and be very, very careful, and just watch the marketplace as well. GameStop is not the only stock out there. There are plenty of other stocks, but one thing I can say is from this, what's going on in the marketplace, there's going to be a lot more people learning about investing when it comes to options trading, day trading, things like that. It's going to happen, and which is a good thing. There has to be a balance. There has to be certain people that think a stock will go up, and there has to be certain people that think a stock will go down, and that's balance in the marketplace. That's how it should be. It's healthy. That's a healthy marketplace. There has to be one or the other, and there has to be a balance. So hopefully you guys did enjoy the video. I know this video is much longer. I know people have asked me my opinion on it, but please make sure that you watch the whole market and not just GameStop, because GameStop's not just the only stock, right? And don't, so just giving my piece on there. I'll probably continue this. We'll see how the week goes. But it's been quite draining because that's all I've been hearing. But it's fun. Of course it's fun. I'm having a lot of fun with it. But remember, this is money that I'm willing to lose, and I've already accepted to lose. But this might be a big victory in the stock market for a lot of people. And so, and that's just my opinion. Again, do your research. So thank you guys again for watching. And hopefully you guys did enjoy the video, and we'll see you in the next one. This is probably my longest video ever. And I'll make the next one short. So talk to you guys later. Bye.